This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on April 27th, 2012. Our time is 8:34 Mountain, 10:34 Eastern. Radio show runs QR77 Calgary, 630 CHED Edmonton, and AM 640 in Toronto. If you ever miss a radio show, they are archived on Harold's website, hesradio.com, hesradio.com. We podcast there as well. You can sign up for the podcast, take our show anywhere that you travel, and listen to us. Harold's website is rarecoloreddiamonds.com, hsfineauctions.com. To invest in precious metals, speak with Worldwide Precious Metals, the only company Harold recommends you deal with. Their website, wwpmc.com. Telephone number to connect with them, 1-866-623-2002. And you can ask about receiving our free weekly newsletter. As we start the show today, U.S. GDP numbers came out at 2.2%, well below expectations. Also, in Spain, unemployment jumped to 24.4% in March. Youth unemployment still at 50%. The Japanese central bank, they're increasing their asset purchases, which is quantitative easing, to about $494 billion. They're pumping more money into the system. Italy's in trouble. Spain's in trouble. We're starting to see China slow down. Harold, we've said for quite some time, it's really a period where you need to be cautious when you're investing. On May the 6th, they're going to be having elections in Germany, France, Greece. Holland is going to be having an election very soon. We're in a time where you need to have hard assets in your portfolio. It looks like Europe is going to be blowing up again. And now is a time for caution, and you need to have that allocation of gold, silver, and diamonds in your portfolio to protect you, because the way things are going in Spain, it looks, Harold, like they're going to be needing a bailout very, very soon.
I think you summed it up beautifully, Randy. It's very concerning, obviously, everything that you just mentioned. You know, right now the gold market is trading higher on the day. We're up 720. We're trading at 1665.30 in gold. The silver market's trading 20 cents higher. We're back up above $31. We traded at 31.55 this morning. Platinum market's up to 1576. The palladium market is strong. It's up $5. It's trading at $682. You've also got the oil market at 104.50. You know, the high that we saw in oil so far this year is 110. The market, they're trying to talk the market down. Obviously, it's an election year. They'd like to get the price of oil down, but I just don't think that that's going to happen. Oil's trading right now at 104.50, and I'm very bullish on oil and precious metals. We think the markets are going to go substantially higher. The U.S. dollar dropped about a penny this week, which is another reason why gold went up. The U.S. dollar is trading against a basket of foreign currencies at 78.80 right now, and the Canadian dollar is trading at 98.50. So the Canadian dollar is actually about a penny and a half stronger and above par than the U.S. dollar, so that's a good thing. The fact is that the U.S. dollar will continue to fall. However, as Europe continues to be in trouble, that's what's sustaining the price of the U.S. dollar at this particular point. Believe me, if Europe wasn't having major problems right now, the U.S. dollar would be down to below 70 cents and gold would be trading above 2,500. Obviously, people are concerned about what's happening in the precious metals markets because it's trading within a range. But one thing you have to realize at this point that, again, it is an election year, so Wall Street is talking down metals and they're talking up stocks and talking up the economy, and we all know that the economy in the U.S. is in dire straits. So at this particular point, gold is trading in its range. It's in the lower end of its range, but let's not lose sight of the fact that with everything that's happening in the world right now, gold is only down about 12% from its absolute high of $1,900, and in this type of market, that's nothing. Silver, on the other hand, has dropped from a high of 50 down to a low of 26. It's back up to $31.50, $32. But again, at this level, silver's a tremendous buy, and I think that you're going to see that silver is going to turn out to be the strongest of all the metals. So at this particular point, Wall Street is talking down metals. It's an election year coming up. The fact is that the Federal Reserve said that there's very little inflation, and again, that's all posturing. There's no way in the world that that is true. Now, we know that as goes the U.S. dollar, gold will go in the opposite direction. Right now, the U.S. dollar, which was trading as high as 84 cents, has come back down to about 78.50, And again, as the U.S. dollar continues to fall, gold will continue to run on the upside. The only thing that is holding the U.S. dollar up right now is the weakness of the euro. But with everything horrible happening with the sovereign debt situation in Europe at this point, the euro is still trading at 131, 132, so it's still trading stronger than the U.S. dollar. Here's what I believe is the thing that we really need to concentrate on with the precious metals. And if you remember that back last year, when silver actually hit $50 and gold hit 1900, and the action in the precious metals markets was extreme. We were seeing, gigantic moves in the markets almost on a daily basis. That's when the COMEX exchange in New York, that's where gold is traded and silver is traded. That's when they started to raise the margin requirements substantially, and that's why silver and gold dropped. That was the major reason, is because the exchanges made it too expensive for the futures traded to trade gold and silver. Let me see if I can make that a little bit simpler for you so you understand, because this is extremely important that you understand why the metals are doing what they're doing at this particular point. You see, most traders, like hedge funds and mutual funds and the major traders that do trade in the commodities markets, they trade the futures markets. And basically the futures markets are extremely heavily leveraged markets where you put up a small deposit. It's called a goodwill or a good faith deposit, and you trade these markets with very heavily leveraged. Now, when silver was trading, let's say at $30, and a contract of silver is 5,000 ounces, if you multiply 5,000 ounces times $30, you're trading $150,000 worth of silver. Well, back before the markets were really active and going crazy, the margin requirements for silver were maybe at $2,000 or $2,500. Let's say they were at $3,000. You're getting 50 to 1 leverage. You're leveraging $150 worth of $150,000 worth of silver, and you're only putting up a portion of that. So when the market goes your way with the tremendously high leverage of 50 to 1, you're making a tremendous amount of money. But when the market starts to go against you, you're losing a tremendous amount of money. So the margin requirements in the gold and silver market, were gradually moving higher. But when silver went to 50 and gold went to 1900 and the market started to trade very, very heavily, that's when the exchanges stepped in and they actually raised the margin requirements. That was how much traders have to put up in order to trade gold and silver, and they raised it 7 or 8 times within a 30-day period of time. And what they basically did was took all the sizzle out of the market, because now it was way too expensive to trade gold and silver, and the traders basically got out of the market. They sold their positions. You saw what happened. Gold dropped from 1900 down to 15 and change, and silver dropped from $50 down to $26. Well, at this point here, the action in the gold and silver exchanges, the pits as they're called them, is extremely slow. Nobody's really trading the market heavily because, again, the exchanges took all the sizzle out of the market. Now I'm starting to notice that the margin requirements are starting to come back down again. So what they're going to do, in my opinion, and I think I'm right on this, they're going to start to lower the margin requirements to get the action back in the gold and silver markets. And that is going to catch the short traders, the people that are shorting the market. They're going to catch them by surprise, and all of a sudden you're going to see that this market is going to shoot up in gold and silver. The fact is that you're never going to pick the bottom or the top of the market, but let's face it, silver at $31 or $32 is a steal. I still believe that the price of silver before this whole situation is over is going to be in the hundreds of dollars. We could see $100, $150, or $200 silver, and again, silver right now is at $30. I think silver is one of the best buys that you can make at this particular point. As far as the Federal Reserve saying that there's not much in the way of inflation, there's just no way in the world that that is true. With oil at $104 and going higher, and the price of food high at this particular point, just because the price of milk, believe it or not, came down slightly, that tells the Federal Reserve that the inflation situation is not as dire as we expect. However, here's the real situation. With the U.S. dollar as weak as it is, and oil prices as high as it is, there's just no doubt in the world that that's an inflationary situation. For the people in the United States, a weak U.S. dollar buying oil means that you're just not buying as much because your dollar is not buying as much. It's also not buying as much of imported items, and it's not buying as much food. So the fact is that the U.S. dollar is a weak currency, And as these currencies get weaker and weaker, and the same scenario is happening in Europe with the sovereign debt situation, again, the numbers that Randy gave you at the beginning of the show are just absolutely astonishing. To see 25% unemployment and 50% unemployment for the young people is just an unbelievable situation. And as bad as things are in the United States, the situation in Europe is even worse. And the problem is that many of these countries that are on the verge of bankruptcy are going to have to go back to their old currency at a fraction of what the euro is worth. So basically, it's the same scenario, a very weak currency buying heavily inflated oil and food means that inflation is going to be rampant. Again, let's not lose sight of the fact that this is an election year. President Obama will do everything in his power to get back in action, to get back as president for another 4 years. That's a frightening situation for most people in the United States. My gut feeling is there's about a 75% chance that he will be reelected. Has he done a great job? No, he's done a horrendous job. He's put the country in the worst financial shape they've ever been in. However, he's got a ton of money in the war chest. He brought home the troops from Iraq and from Afghanistan. They got Osama bin Laden. You know, they can play with the numbers and make the unemployment and the housing numbers look slightly better, but they're not. But all in all, after that, I just think that the economy is going to suffer tremendously. And the last place I would have my money going into 2013 is in paper assets and stocks. So again, there is no doubt. I have not sold 1 ounce of gold or silver that I own personally, nor do I know anybody that has. The only action in the market that's negative is in the paper markets, and that's the futures markets that I just described to you. So there's no doubt that if you believe that inflation is on the horizon with potential oil prices going to 150, 200, 250 or more, and let me tell you why that's possible. There is no doubt that there's going to be trouble in the Middle East, Iran and Israel, and that's possibly going to happen this summer. The fact is there's been heavy pressure put on Iran and sanctions, and they're hurting financially. I just do not see Iran losing faith and saying that they're going to drop out of the nuclear program. I just don't see that happening. So all in all, Iran is preparing their submarines to block the Strait of Hormuz. If you get the newsletter this week, that's one of the major stories in the newsletter. The other major story within the newsletter that caught my eye was that China is possibly looking at war within the South China Sea, and that's, believe it or not, with the United States. The United States is moving troops into that area, and it's really getting China upset. So basically, the Chinese economy, where people thought it was doing so phenomenal, is doing horrendous. In fact, it's dropping substantially. And it is not out of the question that a war would break out with Iran to distract the people with China, to distract everybody over the problems financially in Asia and in China and again in the United States and the Middle East. So do not lose sight of the fact that just because the market has been going sideways for the last 8 months, that we are out of a bull market in gold and silver. We're not in any way, shape, or form. Inflation is the number one thing that we have to watch against, and that's all going to come about because of weak currencies around the world and extremely high oil prices and food prices. Get set for what's going to come, because these markets are going to catch you off guard. It's going to catch the short traders off guard too. The fact is that if they start to lower the margin requirements again for gold and silver, which I would bet money that they're going to do, they're going to catch these traders off guard, and the price of gold and silver is going to skyrocket, and it could literally happen this summer with those events that I just mentioned to you. So hold on to your hats, everybody. Just because this market's gone sideways does not mean that we're out of a bull market in any way, shape, or form. And again, don't lose sight of the fact that who's telling you that the market is negative. It's Wall Street, and Wall Street, in my opinion, does not have a clue what they're doing at this particular time.
Well, to give you an idea, talk about Wall Street, it was interesting. Steve Croft on 60 Minutes last week did a feature on Lehman Brothers, and he interviewed Matthew Lee, who worked for Lehman Brothers. He was one of the whistleblowers. And Croft asked him, do you believe the balance sheets of big Wall Street firms, do you believe them if you read them now? And Matthew Lee, who would not sign off on the financials for Lehman Brothers and was fired a week later, he actually went on to say these numbers are so big and the financial instruments are so complex that nobody stands a chance, really, of understanding. I'd have more fun investing in craps tables in Las Vegas than Wall Street firms. So he's talking the big Wall Street firms. Their financials are basically opaque, and he would not invest in them. And the crux of the story, and you can see it in the newsletter, nothing has changed. No one has gone to jail who is involved in Lehman Brothers. To invest in precious metals, there's only one company Harold recommends, that is Worldwide Precious Metals. Their website, wwpmc.com, telephone number 1-866-623-2002. They are one of the leaders not only just in Canada but the world in bullion. And to celebrate, they have announced an anniversary incentive. To find out more, go to their website, wwpmc.com, or speak with them, 1-866-623-2002. If you'd like to receive our free weekly newsletter, speak with Worldwide. They'll get your name on the list. As Harold was saying, we've been doing the show for over 10 years. We have the knowledge of going through this entire bull market. And we have seen periods like this before many times, where we have huge run-ups and then we have corrections with consolidations. And we're going sideways right now. Every time that has happened, those that have invested, those that have added to their positions or started new positions, started a precious metals investment account, have done very well for all the reasons we'll talk about in our show today. The bull market in precious metals is not over. In fact, it was interesting. We have a couple of quotes in our newsletter, both from Bill Gross. He says, if our stock market and economy is so dominated by one stock, Apple, and its daily fluctuations, be careful. He also said, financial markets are floating on an ocean of credit. Central banks must continue to write checks, or the ship will sink. Then you have somebody like Matthew Lee, basically who used to work with Lehman Brothers, basically saying that no one can understand the financials of Wall Street firms. So how would anyone have a chance? Here's a guy who's an expert, and he reads financial statements for a living. He can't understand them. How can the average person have a chance? That's why we're saying, in the world we have today, with the financial crisis, geopolitical situation, the recession, now is a time to have that allocation of precious metals in your portfolio. Interesting story we have in the newsletter. Gordon Chang, he says China, he believes, will buy gold to pay for Iranian oil. Beijing is planning to avoid U.S. financial sanctions on Iran by paying for oil with gold. China's imports of the metal are already large, and you can guess with additional purchases what that's going to do to the price. Jim Sinclair believes the implications for China paying in gold are huge, and that will mean that we could see $3,000 gold. He believes the shorts will be trapped and we could see $3,000 gold. He believes as well the Western economic sanctions against Iran have inadvertently remonetized gold. Gold is money. And he went on to say in another article that the new European treaty guarantees quantitative easing to infinity. And now we have this de facto gold standard. Reuters and Russia Today interviewed John Butler, and John Butler says a return to the gold standard is inevitable, possibly as soon as within the year, and $10,000 gold is in the cards. He said that during this interview, he has a book out called The Gold Revolution, How to Prepare for the Coming Gold Standard. He believes that $2,000 gold will definitely happen, and he thinks we're on to $5,000 and possibly $10,000 as you have countries moving away from the U.S. dollar and moving to gold, and we have, at that point, a gold standard. Obviously, we're moving, as Jim Sinclair says, to a de facto gold standard when you have countries paying Iran gold for their oil to get around the sanctions. One of the other big stories that came out this week, during this slow period here now, during this consolidation period where we're basically going sideways in the metals, guess what? We had central banks buying $1 billion of precious metals. We had Mexico. We also had Turkey, Kazakhstan, the Ukraine, and Belarus. Argentina added to their gold reserves as well. In total, it was over $1 billion. Keep that in mind as you think about starting a precious metals investment account. We have central banks buying precious metals over $1 billion, Harold. To me, that's a strong indication, and we have about 3 minutes left in the first segment here, a strong indication that they know the financial world is not sound, and they're protecting themselves.
You better believe it. That's very, very important information, Randy. That's excellent. The thing is that, and if you read further into what Randy was just saying, if China is skirting the issues and going around the sanctions of Iran and basically exchanging oil for gold, I think Russia, you'll see, will do the same thing. What does that say about what's going to happen when Israel and the U.S. attack Iran with Russia's troops sitting on the border and China being friendly to Iran? So, again, in these type of financial situations worldwide where we've got these type of scenarios where countries are on the verge of bankruptcy and again, we could be looking at a total financial collapse of some type, the fact is that it's the countries that are going after the gold market. And what does that tell you? That's where the smart money is going. If it makes sense for them to do it, it certainly makes sense for us to do it. And again, while the prices are still low, I would recommend getting into this market as heavy as you can afford, because there is no doubt in my mind that with what's happening in Europe and in the United States, that we're going to be looking at gigantic markets going into next year.
The telephone number to invest in precious metals, 1-866-623-2002. 1-866-623-2002. The company Harold recommends you use, a Canadian company in business for over 10 years, Worldwide Precious Metals, their website, www.pmc.com. Speak with them about investing in these markets, gold, silver, platinum, palladium. They'll go through all the different ways there are to be involved in this market, and it is their 10th anniversary, so they have some specials going on right now. Speak to them about these incentives. 1-866-623-2002, www.pmc.com. One of the stories that I thought was quite interesting this week, and it was from CNBC. They actually aired a segment recently where they went out on the street and they offered people $600 in cash, 1 share of Apple stock, an iPad, or a gold coin. And it was interesting because the average person did not take the gold coin. The most popular thing was an Apple share or an iPad, which just goes to show after 11 years and this bull run in precious metals, the average person still is really not aware of the benefits of investing in precious metals. And we're not in a gold bubble at all. In fact, if we were, everyone would be saying gold. There was really only one person that responded, and he said he felt gold was going to $3,000, and he was more than willing to take the gold over the cash, the iPad, or the Apple stock. And it just goes to show that even though here we are gold at around $1,650, you have Apple shares around $400, and iPad's worth at the most $1,000, and on top of it, $600 cash. You have people willing to take not the gold coin, which is worth substantially more. Very, very interesting. Goes to show that this bull run has a long, long way to go. Learn about investing in these markets. They're the experts. That's why you want to deal with Worldwide Precious Metals. They've been in business 10 years. They know all the ins and outs of the market. They're there to help you profit and protect the money that you have. Connect with them, 1-866-623-2002, the website, www.pmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show April 27, 2012. Our time is 9 o'clock Mountain, 11 o'clock Eastern. Radio show runs AM 640 Toronto, QR 77 Calgary, 630 CHED in Edmonton. Ever miss a radio show? They're archived at Harold's website, hesradio.com, and you can sign up for our podcast as well. Worldwide's Precious Metals website, www.pmc.com. Telephone number to connect with them, 1-866-623-2002. They're the experts in this very specialized field. They're the ones to talk to. They've been in business over 10 years to celebrate. They've announced an anniversary incentive, and you can speak with them at 1-866-623-2002 or go to www.pmc.com for more information. Harold's website's rarecoloreddiamonds.com. You can speak with Harold about diamonds, 1-800-432-1022. His auction website, hsfineauctions.com. Rarecoloreddiamonds.com has its featured diamond of the week. It's in the newsletter. Get the newsletter from Harold as well. This week's diamond is a 0.37 carat radiant cut, fancy intense, purplish pink Argyle diamond. Now think about it. Buying a pink diamond today is like buying a Picasso painting while he was still alive. More than 90% of the world's pink diamonds come from the Argyle mine in the East Kimberley region in the far northeast area of Western Australia. Large pink diamonds tend to go to museums, are gifted to royalty, or end up at auction houses such as Christie's or Sotheby's. In fact, Christie's has auctioned only 18 polished pink diamonds over 10 carats in its 244-year history. We're talking about the rarest of the rare. And Harold, for those that are interested in investing, we personally believe they've said the Argyle mine could shut down around 2019. Could happen 2018, 2019. Rio Tinto that owns the Argyle mine is looking at getting out of the diamond business, allocating their capital in other directions. And that is not an indictment on the diamond industry. If anything, it's a positive because the mines are running out. It's difficult to find new mines, and diamonds are becoming more and more scarce as time goes on.
Well, it's a beautiful situation, and that's why we brought rare colored diamonds to the forefront and offered them to listeners to our radio show. You know, the thing is that if you look back in history at what rare colored diamonds have done, it's really been spectacular. The most expensive of all diamonds and the rarest of all diamonds are red diamonds. Most people don't know that diamonds even come in red, but you know, there's very, very few of them available. They're magnificent diamonds. And basically, back in 1950, one was purchased right around a carat for just under $20,000. Today, these red diamonds sell for about $2.5 million. But those are not the diamonds that we recommend to the listeners to our show to buy at this particular point. The blue diamonds have taken off also. Blue diamonds have skyrocketed in price. In fact, last week when we mentioned the auction results, there was a 3-carat fancy blue diamond that came up for sale at Christie's, or at Sotheby's, I'm sorry. It was estimated to sell for $300,000 to $500,000, and it sold for $2.5 million. Try to find a blue diamond today. They are so expensive, and they just keep going up and up and up. And again, we've been involved in the blue diamond market for a long time now, and we've seen the price of blue diamonds just skyrocket. My job is to find the next blues and reds, the ones that are still reasonable enough in price that our clients can obtain and basically see the appreciation that we've seen in these other colored diamond markets. And basically, there's two that we recommend to you, and both are reasonable in price. In fact, you do not have to be a multimillionaire to invest in diamonds. If you see what happens at Christie's and Sotheby's, you know, many of the diamonds that they sell, especially the very special ones, you know, are $5 million, $10 million, $20 million, $30 million diamonds. You don't have to spend anywhere near that type of money or invest that type of money to make money in the rare colored diamond market. First of all, let's examine why you would want to invest in rare colored diamonds in the first place. Number one, it's a supply and demand situation. The demand for them is very high right now, and the supplies are extremely low, so prices are going higher. That's really economics 101, supply and demand, but it certainly does pertain to a market like the rare colored diamond market because it's such a tiny little market. Very few of these diamonds actually hit the market that are gem quality. So number one, it's a supply and demand situation. Number two, price appreciation. Back in 1979 and 80, the last time that we had massive inflation, double-digit inflation, when gold went to record highs, silver went to record highs, oil did, and interest rates, if you remember, went up to 20 to 22%. That was during 79 and 80 when inflation hit its peak. Precious metals responded to it, gold and silver and oil, obviously, and diamonds, rare colored diamonds and white diamonds went up tremendously during times of high inflation. In fact, they went up 500% in those 2 years. Now, realizing, if you've been listening to our radio show for all this time, one of the major reasons why we do the radio show is because we do feel very strongly that inflation is going to be the number one factor that is going to affect your financial life. If you're not prepared for what inflation is going to do, you're going to find that your standard of living is going to drop substantially, and there's no reason that that has to happen. So again, we anticipate that because of massive inflation coming over the next 5 years, that the price of our investment diamonds could increase 5 times what they are today. Meaning a $20,000 yellow flawless diamond could be a $100,000 diamond with that scenario of extremely high inflation. The other reasons that you would want to own rare colored diamonds is portable private wealth. It's real estate in your pocket. Literally, you can walk around with millions of dollars in the form of a diamond in your pocket, and nobody would even know it. In fact, a 1 carat red, you could carry a $2.5 million in your pocket, and it's only the size of your baby fingernail. That's how transportable rare colored diamonds are. Again, the Europeans call it real estate in your pocket. And the fact is that where you cannot cross a border with more than $10,000 in your pocket in cash or stocks or gold, the fact is that a diamond nobody could even detect because it isn't detected by those metal, survey things type of things, so surveillance things. Diamonds are one of the most important assets you could ever own during times of financial problems, and we couldn't get any worse than what we are right now. So again, we don't necessarily have to chase after the red diamond. If you happen to own a red diamond, you're one of the most fortunate people in the world to own one. There's so few of them available. Blue diamonds have skyrocketed in price, and we anticipate the same thing is going to happen with pink diamonds. Argyle Mine in Western Australia produces 95% of the world's pink diamonds. It was discovered in 1985. The Argyle Mine is the largest producing diamond mine in the world. It produces 30 million carats of diamonds a year. Those are low-grade industrial white diamonds. Most of them are not gem quality. What the Argyle Mine is most famous for is these beautiful little pink diamonds. Very, very few of them come out of the mine. That 95% figure that Argyle produces, again, is a minor number of diamonds. There's so few of them available that, again, they're very, very rare and very, very valuable. Probably the most beautiful diamonds you'll ever lay your eyes on. 95% of the Argyle pinks are under a quarter of a carat, so they're known as small diamonds, but dollar for dollar, penny per penny, these are the most expensive assets on earth when you figure out how much they weigh and how much they're going for. But the fact is that when the Argyle mine closes down, which is probably going to be somewhere between 2016 and 2018, the price of these pink diamonds will go ballistic. There won't be any more of them. Give them 2 years for all these diamonds to run out, and the prices of these pink diamonds will skyrocket. The diamond that you're looking at as the featured diamond this week is a magnificent Argyle pink diamond. It's actually one of the most beautiful diamonds you'll ever lay your eyes on, and you can see it on the newsletter and on my website, rarecoloreddiamonds.com. Go to the loose diamonds section, go to the pink diamonds, and look at the fancy pink, fancy intense, and fancy vivids. You're going to see videos of the most beautiful diamonds you've ever seen. We deliver these diamonds directly to you. We pay for the shipping, the insurance, and the duty coming into Canada. We send you our newsletters each week. We send you auction results. And when the time comes to sell them, we are the only company, and I mean the only company, that has its own auction business. We built 8 Seagull Fine Auctions for our clients to resell their high-end collectibles, and it's one of the most amazing auction sites you've ever seen in your lifetime. The diamonds that Christie's and Sotheby's don't sell, we do, and we've made a market, a secondary market, to resell our clients' high-end collectibles, and I've never been more proud of anything that I've built than 8 Seagull Fine Auctions. It's one of our greatest accomplishments, and we built it for our clients to resell their diamonds and high-end gold and silver pieces, rubies, emeralds, sapphires, that type of thing. We're going to be auctioning off 6 or 7 of the most amazing gold, silver, and platinum coin sets. Very, very rare sets that you can barely even buy anymore. And we're also going to auction off some of the most beautiful pink, blue, and yellow flawless diamonds you have ever laid your eyes on. Go on to HS for Harold Seagull, HS Fine Auctions with an S.com. Sign up for it. You do not have to bid if you don't want to, but in order to watch the auction, you need to sign in and get your password. The last auction, we had over 600 people that attended the auction and over 50 that were bidding on our amazing items. And this auction coming up is going to be one of the last ones of the year because, again, after June, we take a hiatus for the summer. But you definitely want to attend this auction. You're going to see some of the most beautiful diamonds you've ever seen, and they come in at fabulous prices. Now, the pink diamonds from the Argyle mine are amongst the best diamonds you could buy for investment purposes. And again, we know that the mine is going to close, and there, again, is a supply and demand situation. Demand for these diamonds is huge. Supplies are short, and the prices will increase substantially. This is one of the better investments you could ever make. And by the way, the price of these diamonds have never, ever declined in value because there's so few of them. The other market that I want to talk to you about, and this is extremely important, is the yellow flawless diamond market. This is a market that we brought to our listeners many years ago when again, most people weren't even talking about yellow diamonds. But if you see what's happened over the last year to 2 years at auction with yellow diamonds, they've skyrocketed. They probably have gone up as much as blue diamonds have in value. Now, the fact is that, I mean, percentage-wise, obviously not price-wise, you can still get involved in fancy yellow, fancy intense yellow, and fancy vivid yellow flawless diamonds at reasonable prices. But they will not be at these levels for very long because, again, of supply and demand and with the oncoming inflation coming. You can get involved starting at about $15,000 or $16,000. I know that's not for everybody. Not everybody has that type of money. But again, this is one of the best investments you can make. They're very safe. They never decline in value. They increase in price by 25% a year, but again, during times of high inflation, have gone up as much as 500% in 2 years. Means that if you invest in a $20,000 yellow flawless diamond today, it's very possible in the next 5 years that that diamond can increase 5 times what you paid for it. And again, we're the only company that can resell that diamond for you on our auction website. I know there are other firms out there that copy what we're doing, and again, I have no problems with that. Again, competition is great. On every street corner, there's a Wendy's, Burger King, and McDonald's. So again, competition is good. But we are the only company that invested in this amazing auction site, and our clients all around the world have loved participating. In fact, at the last auction, many of the items were bought by Europeans because of the currency situation. Now, what I would be doing at this point, I would be lightening up on your paper assets, on your stock investment, starting to get out of those, because going into 2013 could be one of the worst years you've ever seen for stock investing. If you were to put $20,000 into a yellow flawless diamond and hold on to it for the next 5 to 10 years, you would do extremely well with that diamond. But if you put the same $20,000 into the stock market, chances are you're not going to do anywhere near as well. In fact, you may end up losing most of it. I would very highly recommend that you start to buy multiples of yellow flawless diamonds. With what's happening in Europe with the sovereign debt situation and ultimately what's going to happen in the United States, the currency markets could be in big trouble, and rare colored diamonds could be sold in other currencies. In fact, as I mentioned before, the client of ours that bought a lot of our diamonds from the last auction was from London, England, and he got a 35% break on the currency because the British pound is worth more than the U.S. dollar. Well, the same scenario will happen when we go to sell these diamonds, and we will look to make money for you, not on the sale of your diamond, but hopefully on the currency also. You want to buy multiples of yellow flawless diamonds if you can afford them, because they may be the best form of currency that you could use. And again, with what could happen with the euro, with the U.S. dollar, and other currencies around the world, and the severe price increases in oil, you want to own many of these yellow flawless diamonds. And I have clients that will buy 5, 10, 15, 20 of these diamonds at a time. There's very few available. We put a lot of money back into the yellow flawless market, and right now we probably have close to 80 to 100 yellow flawless diamonds, which represent pretty well a full year's worth of production. We did this so our clients can get geared up for what's going to happen the latter part of this year and early next year. I would very highly recommend that your investment dollars go into yellow flawless diamonds, fancy yellows, fancy intense, fancy vivid, and they have to be flawless. Those are the ones with a track record, and they tend to go up the most. Again, we're very, very excited about what's happening in the diamond market, and if you go to rarecoloreddiamonds.com, look at our website, look at the loose diamond section, go to our yellow diamonds, you're going to flip when you see how beautiful the videos are of these amazing investment diamonds. And again, we're the only company that can resell your diamonds for you on our website, auction site, hsfineauctions.com. Please sign up this weekend. Whether you're going to bid or not, there's going to be a lot of fun coming up in 3 weeks from now, and you definitely want to be part of it, because we're going to sell off some of the most beautiful pink, yellow, and blue diamonds, along with gold and silver coin sets. We're going to do very well for our clients.
Speak with Harold Siegel at rarecoloreddiamonds.com. Diamond telephone number 1-800-432-1022. Speak with him about that Argyle pink diamond, the featured diamond this week. rarecoloreddiamonds.com, 1-800-432-1022, hsfineauctions.com. Speak with Harold Siegel about investing in this market. A lot of times people wonder why we say invest in hard assets. gold, silver, platinum, palladium, diamonds. We personally believe that quantitative easing, we've already had quantitative easing 1 and 2, and we believe that number 3 will be on the way. It's difficult for them to do it in an election year. This week, the Fed kept interest rates in the United States at a record low, and they said they would not raise them until at least 2014. That's a positive for diamonds and precious metals. Ben Bernanke came out and said that they are prepared to do more if they have to. And after seeing the GDP number today, very poor, they may have to do more. After we see the jobs numbers continue to be bad, they may have to do more. You look at the housing numbers, which we have in our newsletter. Case-Shiller Index was down yet again, housing down to 2002 levels. At some point, they're going to have to do what Japan did this week, and that is more quantitative easing. But to give you an idea of what's going on in the world today, the sovereign debt crisis continues. That's why you want to own gold, silver, diamonds. The UK is in a double-dip recession. That came out this week, the first since the 70s. Spain is still in a recession. They have unemployment at 25%, youth unemployment at 50%. Their rating was cut on the bonds. That means they'll have to pay more for those that are willing to buy their bonds. The cost of their housing bust could mean a bailout that Europe would have to bail out Spain, as if it's bad enough. They've bailed out Greece a couple of times. Now they'd have to bail out Spain. Don't forget about Greece, because they have a severe recession there. In fact, their banks just recently posted $37 billion in losses on debt restructuring. You have top people coming out like George Soros saying that Europe's social, economic, and moral crisis could result in a Soviet Union-like collapse. It's a very serious situation, and the United States, they're just as bad. Their U.S. debt and deficit situation, and you can see this in our newsletter, the United States has greater debt than the Eurozone and UK combined. The United States, with their debt at $15.1 trillion, the UK, Spain, Italy, Greece, Germany, France, and others amount to $12.7 trillion. Coming out this week, Social Security, the fund in the United States, is going to run out by 2035. You heard right. Also, in an apparent first, a public pension plan has filed for bankruptcy. The Northern Mariana Islands plan is in deep trouble. It filed for Chapter 11 bankruptcy in the United States. Assets of $268 million, liabilities of $911 million. You know, and I think we're going to see that more and more in the United States. The money that was promised is not there to pay the people. The promises, they can't be kept, will not be kept, because the money is just not there. Also, 5.4 million people have joined disability in the United States during the time that Barack Obama has been the president. People are just going on disability so they can get a government check and survive. Also, Illinois has $9 billion in unpaid bills. You heard right, $9 billion. They cannot pay them. The next crisis they're concerned about is the student loan situation. They think, will there be a bailout there? There's roughly $1 trillion in student loans that are outstanding. People, students, former students, current students, struggling to actually pay those bills. And here's a sign of the times. Detroit is so strapped financially that their fire commissioner actually has come up with a proposal to save money. Just let vacant buildings burn down. You heard right. If a vacant building is going to burn down, just let it go. They won't show up because they don't have the money. And on the real estate side of things, as I mentioned, the Case-Shiller Index came out. Housing prices down 3.5% from a year earlier. It's not a huge amount, obviously, but still, you're looking at a scenario where home prices at 22 levels. It's a very, very serious situation. Harold, and we have about 4 minutes left in our show here, when I run through everything, and the reason I do that is to make the point, now is a time for hard assets. Speak with Harold Siegel and speak with Worldwide Precious Metals about investing in precious metals, about having diamonds in your portfolio, because we're in a time where there are so many financial landmines out there. You must protect yourself.
tell you, Randy, you did a great job today. Everything you're saying is just so concerning, and again, so true, that home values, most people have most of their net worth in their home, so you can imagine how poor most Americans are feeling right now because their homes have plummeted in value, along with the fact that the markets have not been good for them and the job market in the States is horrendous. So, again, we're heading into extremely difficult times. Let's not wait till they're already here. Let's be smart about this. This show has been on for over a decade. We started buying gold at $250 when nobody even thought that gold was a good investment. And again, many of the things that are happening now, we predicted many years ago. All we care about is that our listeners to our radio show get through these, these difficult times, and these times are going to be very, very difficult. Some of them are compared to depression times. I mean, the unemployment numbers in Europe are reaching depression-type numbers. So let's not wait till this is already thrust upon us. Let's be smart. Let's take out the insurance that we need to get through these extremely difficult times. Gold, silver, rare-colored diamonds are going to get us through these times and not only protect what we have, but give us an opportunity to make money to compensate for inflation. Again, it's never been more important than it is right now to make certain that you have all your ducks in a row, because soon it's going to be too late, and we don't want to chase the markets. We want to be in the market making money, not running after them trying to get an entry point.
To invest in precious metals, the telephone number 1-800-432-10. Actually, that's Harold's number, 1-866-623-2002 to invest in precious metals. Worldwide Precious Metals, www.pmc.com. Precious metals telephone number 1-866-623-2002 to invest in precious metals. That is the number to call. Diamonds, rarecoloreddiamonds.com, 1-800-432-1022, and connect at hsfineauctions.com. Coming out this week, Jim Rogers says something is wrong with the stock market. And you can get that in our newsletter. You can get the newsletter from Harold or Worldwide. And he says we better be worried. He's predicting disaster for 2013. He says you have tax increases in the United States and you have recessions every 4 to 6 years. The recession obviously is due. He is very, very concerned. Michael Pinto, he says that he believes that decoupling is an illusion. Some people are selling that the United States won't be affected by what's happening in Europe. He thinks the global markets are going to get crushed in the summertime. And with some of the elections coming up in the European countries, depending on who gets elected, it could get very, very interesting. Harold, with about 30 seconds left, we should mention you were in a special spot today.
Yes, I'm actually broadcasting from the oldest city in the United States, St. Augustine in Florida, up here on a little bit of business and visiting some friends. And again, just a spectacular place and very, very exciting historically. So all in all, again, everything that we talked about on the radio show this week is extremely important. And again, all we want is to make certain that our clients are all ready for what's going to come up and what's happening already. Again, gold, silver, and diamonds are going to get us through these difficult times.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Dan Orsini, who posts things on Jim Sinclair's website, said if history is any guide, this is going to end badly. And he says the way for people to protect themselves is to have an allocation of precious metals. Robert Fitzwilson saying that the sleight of hand of the global financial system is like a roach motel. Don't get caught in it. And he says time is running out for those wishing to protect themselves through purchases of real hard assets. To invest in precious metals, 1-866-623-2002. Connect with Worldwide Precious Metals, www.pmc.com. There's rarecoloreddiamonds.com, Harold's website, 1-800-432-1022, or speak with Harold about the auction coming up at hsfineauctions.com. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.